Hello there, my fellow bananas. I'm Capuchin, your favorite jungle trader, and today I'm going to teach you how to start trading Forex the smart way. All right, so let's get started with the first lesson. What even is Forex? Let me show you. Every single day, people around the world buy and sell things. When you buy something from Amazon, you use dollars. But when you want to buy something from our friends in Europe, they use euros. And if we want to buy from our buddies in Japan, they use yen. For example, let's say you think that the euro is going to get stronger against the US dollar. In that case, you would buy euros and sell dollars. And if you're right, then you do make a profit because you can sell those euros for more dollars than you originally bought them for. The best brokers are regulated, meaning that someone from the government has checked their homework and made sure they are safe to use. So be careful and do your research to make sure that your broker is good. Good brokers also have low fees and commissions, so you don't lose lots of your hard-earned money. What next? Well, the next thing you need to learn about is risk management. That means that you would set your stop-loss order for $20. If you're wrong, you lose $20. But if you're right, then you can keep $20 in your pocket. So remember, never risk more than 1 or 2% of your account on one trade. They also have good customer service. So if you ever have any questions, you can ask them. So never risk all your money on one trade. No matter how sure you are, there's always a chance that you could lose. That's why you should always set a stop-loss order. If you're lucky, you might even get a double top. Now, if you want to practice without risking real money, you can go to the demo mode. Demo mode is when you trade with fake money, so if you lose, it's okay because it's not real money, it's just fake money. This is when the price goes up, down, up again, it makes a new high. When this happens, you can increase your take profit order to the next swing. This is bad because when you trade too often, you increase your chances of losing money. Next, let me share with you a final tip. The second mistake is revenge trading. Revenge trading happens when you try to win back your money after losing. This is bad because when you feel angry, you cannot think clearly, and you're more likely to lose. Thanks for watching, and I'll catch you in the next one. The third mistake is being an emotional trader. If you're scared or sad, you're more likely to make the wrong decision. If you only have $1,000, then open a $100 trade. Be patient and give yourself time to learn. If you stay focused and put in the work, you'll be on your way to success in no time. Remember to subscribe so you don't miss out on future videos. So to prevent this, you want to make sure that you're calm and focused when trading. The best way to do this is to meditate before you trade. This order says that when you lose a certain amount of money, to close the trade. This makes it easier for you to trade and helps you not to be an emotional trader. So here's a simple strategy that you can try. Getting stopped out happens when you place a trade, but the market moves against you and you lose money. To prevent this, you want to make sure that you place your stop-loss order above the swing high. Let's pick 250. Then you want to open another window and select the RSI indicator. Instead, use these losses as a learning experience. Think about what you could have done better and make a plan to improve. The RSI stands for Relative Strength Index and tells you if a market is overbought or oversold. You should also set a take profit order. This order says that when you make a certain amount of money, close the trade. After they cross, you want to see if the RSI is above the 70 line to tell you if it is overbought. You want to wait for the RSI to cross below the 70 line. Once it does, you can enter the trade. Or let's say you think the US dollar is going to get stronger against the euro. In that case, you buy dollars and sell euros and hopefully make a profit. So if you want to buy stuff from different countries, you need different kinds of money. That's why Forex was created. And every single day, people that work in Forex buy and sell these different kinds of money. All you need is an internet connection, a broker account, a trading platform, and a basic strategy. I'm going to show you all of these things. But first, let us look at how to choose a broker. In fact, every single day, over $6 trillion are bought and sold. That's a lot of money. So now that you know what Forex is, let me show you how it works. When you trade Forex, you have to pick which currency you think is going to get stronger against another currency. But wait, before you rush to open an account, let me show you what you need to start trading Forex. Now, you don't need much to start trading Forex. There are many brokers out there, and picking the right one is super important. Now, some brokers out there are scammers. They just want to take your money and run away. All right? So you found a good broker and opened an account? You never want to put all your eggs in one basket. For example, let's say you have $1,000 in your account and you decide to risk 2% of your account on one trade. Next, let me show you how to build a simple strategy. A strategy is basically a set of rules that you follow when trading. First, you want to open a chart and pick two moving averages? Then you want to wait until the 50 and 200-day moving averages cross each other. When you enter the trade, you want to be careful not to get stopped out. If you enter the trade and the market moves in your favor, then you want to set your take profit order above the swing high. If you're able to do all this correctly, then congratulations, because you just made money. Next, let me share with you some common mistakes that traders make. The first mistake is overtrading happens when you trade too often. All right, so you learned about risk management and how to build a simple strategy. It takes time to become a great Forex trader, so don't get discouraged if you lose some money. Okay, so now that you know the basics of Forex, let me leave you with a final message. Don't be afraid to start small. If you only have $100, then open a $10 trade. Oh, and one more thing. Don't forget to smash that like button. Well, that's all for today's lesson, folks.